can't live off $120,000 a year of income.
Have you ever scrolled through your social media feed and found something that just blew your mind? So today, my team has put together some of the most obnoxious, random, viral financial videos that any of you have probably ever seen. I have no idea what to expect. But before we dive in, my kitty cat, Lazy Cash, would like you to like and subscribe right now.
If you want to have $3 million in retirement and you're earning 7% interest, you need to save $30,000 a year for 30 years straight. Financial planning, as you're being taught, save as much money as you can in a retirement account, is the absolute dumbest thing that you can do because it's mathematically impossible for you to do it. In traditional financial planning, you're trying to not run out of money when you retire. So they use something called the 4% rule. If you've got $3 million saved up, you can take out 4% per year, and hopefully you never run out of money.
But you will.
That's $120,000 in income. If that $120,000 is going to replace your current $120,000 income, you can't afford to save $30,000 a year. And the people that can afford to save $30,000 a year can't live off $120,000 a year of income. If you want to get financially free without waiting until you're old, we buy assets that produce passive income. When your passive income is greater than your expenses, you are financially free.
I completely agree with that. When I was an advisor, we used the 4% rule. I never really thought about the fact that someone would have to save $30,000 a year because most of the people I worked with couldn't save $30,000 a year. And the ones that could save, like he said, they're not living on $120,000 a year with the 4% rule. The whole system is broken. When I left Wall Street, it was one of the greatest things I did because I didn't have to subscribe to that nonsense. And his point about buying assets that produce assets, I always say the same thing. Make your money go to work for you. Take back control of your money. That's all you need to do. Change one thing, and that's where your money goes first. Because just like he said, if you subscribe to the traditional financial methods and the financial planning that they're teaching out there, you're going to fail or you're not going to fit the little square box that they want you to. Come on, $30,000 a year? How many people do you know that can save that just to make $3 million? You can't save your way to wealth. Let me repeat that. You cannot save your way to wealth. Your money must work for you.
Somebody says, hey, I got $1 million in my 401k. I say, great. How much of that is yours?
Oh, Tom Hagen.
They go, what do you mean? It's all mine. I go, it's not yours. You got a partner. In fact, you're the limited partner. The general partner is the federal government. Yeah. And you have no idea how much they're going to take from you. Like right now it's 38, 39% they're going to take. What happens when it goes to 50, 60, 70% like in the past, or up to 90% as we did in the 1950s? Yeah. The marginal tax rate was 90%. You have no idea how much of that money is yours.
The lowest tax break.
Why don't you put it into something that you can control that
Tom got it.
Yours. But that 401k, you have no idea how much of that money is yours.
Nope. It's that thing. Hey, I know this guy. That guy used to come into our financial firm and put on presentations. I loved him. He always took like the simplest concepts and basically made them even simpler. But think about what he's saying. You're being lied to. Put money in a 401k and you're going to be able to retire and sail off into the sunset. Oh, by the way, put your money in the 401k and you get to do that pre-tax. No taxes on that money that goes in. Matter of fact, you don't have to pay taxes today. Matter of fact, you should want to pay taxes today because you're at the lowest tax bracket you're ever going to be at. Taxes are going to go up. When I speak around the country, I always ask people, who in here thinks that taxes are going up and who thinks taxes are going down? Nobody says taxes are going down because nobody's an idiot. They all know taxes are going up. So put the money in, get the deduction today, and take the money out at a higher tax rate. Who's the idiot here? The people telling you to put money in 401ks. They're the idiots because they're lying to you. They're telling you to do something they wouldn't even do with their own money. And if they are doing it, they're even bigger idiots. Anyway, good job, Tom.
Life insurance people should be in the life insurance business. They got in the investment business because they figured out it was a way to screw people. Anytime you pay someone half of what they should be getting per month and then you keep their money when they die, that by definition is screwing them. If you don't like it and you're in that business, you should get in another business, and that way I won't say you're screwing
He's the
people.
one screwing people. Did you just listen to that? Mr. Dave Ramsey with the best advice, right? Dave Ramsey, oh, he knows all. Life insurance people should stay in the life insurance business. I don't so much disagree with that. But then he says, oh, but they get into the investment business because they want to screw people. I spent 20 years in the financial business. Almost all financial advisors will help people with life insurance. It's part of a holistic financial plan. Why would you ever listen to him? Seriously, like, I can't understand it. Like, Dave had great advice about how to get out of debt using the snowball effect. Lowest balance to highest balance, use the little envelopes, great. For people that are paycheck to paycheck, that can't save a cent, then he gives good advice. But everything beyond that, he is an idiot. He is clueless. He's very cynical, and he doesn't even know what he's talking about. Like, that statement, that little video right there shows it. Screwing people? He doesn't even know what he's talking about, and the fact that people listen to him is sad.
Is one of the smartest investments that no one's talking about, life insurance. They have what's called dividends. As you put money into it, it grows over time. It also has what's called a cash value. You could actually take the cash value out of it and then use that money to go invest in things. You could borrow against that cash value. You're paying an interest rate on it, but you're paying yourself the interest rate on it. You could use that money to go invest in something that's going to produce 10% returns. You could go invest in real estate. You could go invest in the market. Whatever you want to do, you become your own bank. That produces a revenue stream for you. At the same time, your life insurance policy does not reset and it keeps growing. One of the smartest ways to invest in things, to not be dependent on banks and become your own banker and build an ultimate wealth machine.
Nice. The Lazy Cash even liked it. Did you see his reaction to that video? He was like, heck yeah, take that lazy money and put it to work by being your own bank. So what he talked about there isn't life insurance. I don't know if any of you picked up on that. Jason wasn't talking about life insurance hardly at all. He did say life insurance because it got all your attention, but then what he talked about is a process. He talked about how all of you can change one thing, and that's where your money goes first. Take it from where you're saving it now, put it into a specially designed whole life insurance policy. But then he said, don't leave it there. Use a process called the infinite banking concept, and then make that money go to work. And that money then goes to work for you in investments, by buying cars, by paying off debt. He talked about a bunch of things. You could even add real estate and everything else. It's infinite. And then take the money you make there, and why would you give it back to the same place where you changed in the beginning where it went? You would take it from the source, put it back into the policy as a loan repayment, and you are in control of all of your money. Plus, you make a spread the entire time. Doesn't that sound like what a bank does? Bank takes your money, pays you interest, then makes your money go to work for them, and what do they make in the middle? A spread. You could do the same thing, and that's what that video was talking about. Now, if my cat would stop knocking things over, maybe I could focus a little bit more on what we're talking about here. Knock it off.
The SEC is suing Binance and CEO Changpeng Zhao. The SEC accuses Binance, the world's biggest crypto exchange, of mishandling customer funds, misleading investors, and breaking securities rules. 13 charges, people. SEC Chair Gary Gensler has accused Binance and Zhao of a calculated evasion of the law. On the other hand, Binance is calling the complaint disappointing and maintains it had engaged with the SEC in good faith negotiations. Two tokens, BNB and BUSD, have been cited as improperly offered securities, escalating tensions. The SEC alleges that Binance's US affiliate was not independent as claimed, but instead, Zhao was secretly controlling it. Not enough drama, the SEC also accused Binance of misleading investors about trading controls, alleging that Zhao-owned firm inflated Binance.US's trading volume via wash trading. The SEC alleges that Binance mixed customer funds improperly, with billions transferred to an entity controlled by Zhao, then to a third party to buy and sell crypto. They claim that at least $145 million was transferred from Binance.US to a Sigma chain account, $11 million of which was used to buy a yacht.
So I'd seen this before. I had been following what was going on with Binance and the SEC, and I'm sure there's some truth on both sides, but really, one of the things you have to understand is the crypto markets, what they're talking about with Binance and the owner, it's very unregulated. The SEC is trying to, as quickly as they can, regulate that industry, but it's very difficult because the SEC doesn't fully understand it yet. By the owner Zhao, owning different entities, moving money to them, and using blockchain and different sources that the SEC really doesn't know how to track. That's why they're so up in arms about this. Now, the thing that kind of throws it off a little bit is how they're talking about $11 million yachts being purchased. So a lot of times, this would be considered money laundering in one way or the other. They're trying to move money through various different sources, and then at the end, put it into assets, which sounds a lot like what the SEC is kind of tracking. Now, the SEC owned by the government is going to figure it out. They're going to hire smart people if they already haven't, and they're going to figure out exactly what he's doing. Chances are Zhao is going down, and Binance will probably go with it. Now, whether you're in agreement with the SEC or with Binance, it doesn't really matter. What's going to happen is going to happen. And typically the SEC, when they want something done, they'll go at it with full force. So, best of luck, Zhao.
5 ways to build generational wealth. 1. Buy land. Land is the ultimate store of value. Buying a piece of land today is guaranteeing a better future for you and your children because people will always need land. And with time, the value of land increases.
You better
2.
buy a big lawnmower.
Buy cash-flowing property. The best cash-flowing
more
property are
tenants.
commercial property.
Don't do that in
apartment
New
rental,
York
and
or
hotels.
California.
As
You'll
long as you
never
don't
get rent.
sell these property, you will forever cash out from these investments.
Forever?
3.
Strong word.
Build an evergreen business.
Evergreen.
An evergreen business
Evergreen
has
business.
made money
Just
in the
like that.
past.
Evergreen.
It's making money now.
Evergreen.
Will make money long after you're gone. 4. Never stop earning and minimize taxes. If the goal is to build long-term wealth, you should never stop earning. A person who can't earn cannot hold on to wealth.
I totally agree
5.
with that one.
Marry well. If you are a hard worker with plans of building generational wealth, choose your partner wisely because the slightest mistake might ruin all your hard work.
Buy land. Let's start with that first one. So I agree with that, but you got to buy land in the right place. Like, you're not going to just go buy land. And a lot of people would take what that advice is and they'd be like, oh, all I got to do is buy land and I'm going to be wealthy long term. Not necessarily. Matter of fact, if you just bought land, you're missing a whole bunch of factors like what are the taxes on the land? What is the upkeep and the maintenance on that land? What are you going to do with the land? It's not just buying land that makes you wealthy, it's actually the plan that you're going to have for the land. The second thing he said is buy cash flowing properties, buy rentals, commercial properties he mentioned. Now, I've done this. I had 91 rentals. Now, it's a great way to produce cash flow, but you're going to have to buy the right properties in the right area. I'll certainly tell you this, in New York or California, you're not going to make cash flow on properties. Matter of fact, when we owned all those properties, yes, we made a lot per month. If someone said, how much do you make per month? They'd fall out of their chair when I told them the amount. But every single month, it seemed like something went wrong. A main water line went. It's always going to be problems. Tenants, termites, toilets, all equal problems. So although that sounds like a great way, that isn't the best way for everybody because it requires a lot of work. There's nothing passive about owning rental properties. Then he talks about evergreen business. Let's just go open an evergreen business and no, it's just gonna print money, right? If that was so easy, wouldn't everybody do that? Evergreen business. Like, you really gotta dive into that. Is there truly an evergreen business that just always works? He uses these words, guarantee and for sure and everything else. I don't really love what he's talking about. But the fourth thing he said, wholeheartedly agree with. Never stop earning. A lot of people have this idea that someday they're just gonna retire and stop working. That's right when you're about to die. Because if you lose your purpose, you stop working and you have no drive to do something of substance to help other people, that's it. Game over, folks. Statistics show it. So in this one, he's talking about never stop earning. Find something you love. Never ever stop earning. You should be doing work for the rest of your life, but do work that's meaningful to you. And then he said, marry well. Now, you could take this a lot of different ways. Some of the women out there, they marry up, they marry these old guys for money. That isn't marrying well. Marry well means marry somebody that compliments you, that pushes you, that supports you no matter what. They support you when you have money, and they support you when you're broke. That's marrying well. Outside of that, good video, but a little bit too much emphasis on the easy button, and nothing's easy.
Let's imagine you're earning $100,000 a year, and you have no
Great.
debt. Then I can go out and borrow. Because I have no debt, I can go to the bank and I can borrow.
Yeah.
And let's say they lend me $10,000 a year. So now I have $110,000 a year that I could spend. When I spend that $110,000, somebody else earns $110,000.
Yeah.
So that causes their earnings
And they're able to level up.
As their earnings go up, they also can go to the bank. And so you build a cycle in which debt rises faster than income.
And up.
Most importantly, the debt rises faster than the ability to service income. So that is a self-reinforcing upward cycle. It causes asset prices to rise because if incomes are rising, companies are doing better, so their earnings do better.
I just saw that.
And so people with debt can buy goods, services, or financial assets. And those things cause them to go up. So there's a debt expansion. But obviously debt can't rise faster than income forever. Usually when we had a downturn, you'd lower interest rates, because lowering interest rates would have stimulative effects on the economy. First, when we lower interest rates, it has the effect of make it easier to service your debt.
Don't ever let that happen to you.
Make it easier to service the debt. Also, it makes items that are bought on credit cheaper. Your monthly payments go down. If you buy a car or a house, your monthly payments go down if interest rates are lower, so it makes it cheaper, meaning you could afford more. So it stimulates the economy. And it also has the effect of raising assets prices, because assets, if you have an income stream, it could be renting a property, you're comparing it with the going interest rate. And if the interest rate goes down, the value of the asset goes up.
You paying attention?
So it has a wealth effect.
You watching this?
So as the economy works, when there were lower interest rates, it would have the effect of stimulating an economy. And that stimulated economy really stimulated debt growth, and therefore purchasing on debt, and it raises.
Now you can see why not everybody watches Ray Dalio. So I'll be the first to say I'm a huge Ray Dalio fan, and second is probably my cat, Lazy Cash. But what he's talking about there is what you all just witnessed. Now, some of you are too young to understand what's next. Ray Dalio is not, and I am not. You see, we're in a cycle, but we're at the end of a cycle. He's talking about what just happened. The Fed dropped interest rates, pumped a bunch of money into the economy and into the central banks, making it really easy to get money, which means anybody with an income was levering up that income. How many of you, and how many of you know somebody that has actually used leverage to get more assets, whether it's cars, rentals, buy a bigger house, buy a boat? It's all levered up, right? Why were they able to lever up and get more debt? It's because they had income. But what happens at the end of a cycle when everything reverts the other direction, like Ray Dalio is talking about? What happens when a cycle ends and people start losing their jobs? Their income goes down. The debt servicing does not. So now all of a sudden you've got debt that needs to be serviced, but you don't have the income to pay for it. I think we all know what happens there, or at least you could be smart enough to know what happens. But the same thing is happening to the US government. They're racking up more debt. They're not even bringing in enough income to support the amount of debt they have. And now that interest rates went higher, that means that the government's debt service doubled in cost. So one of two things is going to happen. We're going to be forced into a recession by sheer necessity because the government needs interest rates to go back down. The Fed will not lower interest rates until they get a hold of inflation. So to get a hold of inflation, they got to kill employment. They got to have all of you be unemployed, because when you're unemployed, you don't have income, which means you can't spend money, which means you can't keep growing inflation. Are you understanding what I'm saying? Because it's exactly what Ray Dalio is saying. It's coming, folks. The end of the cycle is already here. The recession will be here very soon. Many people that you know will lose their jobs, their incomes will go down to unemployment levels, they will not be able to support the debts, assets will go down in price, and for some of you it will be a big opportunity to buy assets a lot cheaper than they are, but for some of you, it'll be one of the hardest times of your life. So you should pay attention. Listen to Ray Dalio and understand that the good ain't gonna be good anymore. What's your favorite financial video? Comment below. And if you enjoyed this video, then like and subscribe to this channel to get more. Also, check out this video where I react to one of the most ridiculous videos about infinite banking that I've ever seen. Give it a whirl. See you next time.